You're tuned into the right channel for the latest in business news. Today, we dive into BP's recent financial report and what it means for you. Let's start with some numbers. In 2023, BP reported its second highest annual profit in a decade, raking in $13.8 billion. Sounds impressive, right? However, when you compare it with the previous year, there's a significant drop from a whopping $27.7 billion in 2022. The culprit? A decrease in oil prices, but it's not all doom and gloom. BP has a plan to keep its shareholders happy. The company announced its intention to return cash to its shareholders, an initiative that has been met with general enthusiasm. This isn't just a vague promise, though. BP has put its money where its mouth is, announcing share buybacks totaling $1.75 billion in the first quarter of 2024. Now, some of you might be wondering, what exactly does a share buyback entail? Well, it's a way for companies to reinvest in themselves. By buying back its own shares, BP reduces the number of outstanding shares in the market, which can lead to an increase in share price. It's a move that carries a clear message. BP is committed to boosting its share price and returning value to its shareholders. So, despite the decrease in profits, BP is far from a sinking ship. The company is adapting to the ebb and flow of the oil market and seems determined to keep its shareholders at the heart of its strategy. So, with this report in mind, it's clear that BP is focused on rewarding its shareholders amidst fluctuating oil prices. Moving on, let's delve into BP's production plans and the ensuing environmental concerns. This year, BP anticipates a rise in oil production, a move that has been met with an array of reactions. However, it's not all oil and roses. The company also expects a dip in output from gas and low-carbon energy. This shift in focus has not been well received by all, with environmental groups voicing their concerns about the potential implications for our planet. The criticism doesn't stop there. BP's decision to scale back its ambitions to reduce oil and gas production has been met with a chorus of disapproval. Yet, amidst the clamor, BP's newly appointed CEO stands firm, disagreeing with the call from one investor group to abandon the company's targets for lower output. In the face of mounting pressure, BP's strategy remains clear and unwavering. The company's primary focus is on enhancing the share price and delivering value back to its shareholders. It's a balancing act of sorts, with BP trying to navigate the fine line between profit and planet. Yet, the question remains, can BP reconcile its profit-driven goals with the urgent need for environmental stewardship? As we delve deeper into the 21st century, this is a question that looms large not just for BP, but for all major corporations across the globe. Despite the criticisms, BP remains steadfast in its strategies aiming to boost shareholder value. Now let's shift gears and discuss BP's tax payments and security concerns. Picture this. The year is 2023, and the UK government introduces a windfall tax. This move comes on the heels of a surge in oil prices the previous year, which led to bumper profits for energy companies. And BP, being one of these energy giants, found itself in the crosshairs of this new tax. BP paid a substantial sum as part of this windfall tax, a staggering $720 million. This sizable payment underlines the company's commitment to meeting its fiscal responsibilities, even amidst fluctuating market conditions and the ongoing debate around corporate taxation. But tax payments were not the only challenge BP faced in 2023. The company also grappled with security concerns, specifically attacks on shipping in the Red Sea. These incidents led to a strategic diversion of BP's ships away from the Suez Canal, a critical global trade route. It's a testament to the company's adaptability and resilience in the face of unforeseen threats and disruptions. These challenges highlight the complex landscape that BP navigates in its operations. In conclusion, BP's recent report paints a picture of a company navigating a fluctuating market with a focus on shareholder value. We've seen their second highest annual profit in a decade and plans for share buybacks. Despite facing environmental criticisms and falling oil prices, BP remains steadfast in their production plans. Security concerns have also been a factor, with a tax on shipping leading to diversions away from the Suez Canal. And let us not forget the significant windfall tax payment they made last year. That's all for today's analysis. Stay informed by subscribing to our channel, where we bring you the latest in business news.